Thanks a lot for joining me on this Monday afternoon market recap. Before I move into the technical picture, I just wanted to extend, a notice to everyone out there in the YouTube community. Do not be afraid to reach out to me, if you have any questions, queries, concerns about the analysis that I walk through in these public forums. My email address is listed below, in the title, or at least underneath that in the description of this video, success@pivotpoint-trading.com. I do receive a lot of emails from people right around the world in regard to the analysis. And again, don't be afraid. Don't feel timid whatsoever. I'm here to help you. That's why I provide these public videos on YouTube. And again, I think it is a tremendous time in the market, to be trading long as we see these markets break out above their respective all-time highs. So again, if you have any questions, concerns, queries, anything at all in regard to trading, the US financial markets, options, whatever it is, strategies, send me an email and I will get back to you in due course. And hopefully I'll answer your questions or provide you with whatever information that you may need at this particular time. Now, jumping back into the analysis of these markets, just to sort of recap over the past number of months. Again, we've been resolute in our conviction that the market is going to break to new fresh all-time highs. And this is the chart of the S&P 500. You can see on my screen up here, the daily chart. And this is obviously where we closed at during today's session, closing at 3,039 points, up another 16.87 points as at the close on Monday. The good news for people who've been following along with this analysis is that, again, you can go back and have a look at all of these past long trades that we've had and we've been accumulating over the past really year, if not longer, but to some extent anyway. If you've been in here for not as long as that, you might have only really sort of recapped this from August or so, or even back to April or May. But as you can see, the markets again have just really established that, or at least on the S&P 500. It hasn't done so yet on the Dow Jones Industrial Average. You can see that we're still technically below that of the September swing high. And when I change on over to the NASDAQ, you can see over here that we have now, just pushed to a fresh all-time high as well. So we've got 2 out of the 3 markets that have done, as we've expected. And we've been sort of thinking about that this would happen in the last quarter of 2019. Time will tell whether or not these markets hold up relative to where they're trading at the moment or where they closed during today's session. Yes, the elephant in the room is that we have printed another open window between that of Friday's close and where we sort of opened during today's session. And on top of this window just here, this takes us back to the original move that got started earlier in the period of October that we're still contending with. So again, we'll see what these markets do and how they play out over sort of the next couple of weeks. And certainly more so what we're interested in is the conviction and the legitimacy of this trend breakout that we're starting to establish on the S&P further into 2020. I still firmly believe that 2020 is going to be a very prosperous year for those trading long in the financial markets. 2021 is a different story, but for the time being, there's only one direction this market is set to take, and that is, again, seeing gains to the upside. We're going to see higher prices, but on the minor level of this wave, we still have these open windows to contend with. Now on the Dow Jones, or at least I'll flick back into the S&P 500, you can see, and this is something that we were speaking about publicly, was the relationship that was going to play out with the rising exponential moving averages. What it looks to be sort of happening at the moment is that our suspicions are true and that we are seeing a reaction off from, the acceleration of these exponential moving averages. You can see that we're pushing off from very firmly that 10 exponential moving average. They're starting to move parabolic. And now we're starting to deal with, or at least the public itself, who aren't as sort of tech savvy as what we are when it comes to technical analysis, the fear of missing out as they see the headlines of the markets trading at new all-time highs. Soon you're going to see a plethora of money enter into the market, and this is going to help boost this market higher. This is what we call public participation. So what we've been talking about over the past number of months has been that consolidating sort of pattern that we've been in moving sideways. This is what we've been referring to as accumulation prior to the public participation. Well, here we are. And again, what we've been speaking about is when the traders themselves anyway have that sort of that moment whereby the psychology of market participants changes, The tipping point occurs whereby people are just going to start throwing cash into the market. And right now, that seems to be that critical point. In the past, we've spoken about very important signals, Signals such as these candlesticks and this candlestick just here. Also, this candlestick. These are all past public videos that you can go back and reference. But now that we're back up here and we're starting to break above respective all-time highs and people are starting to read, of course, the financial media headlines, They are going to believe at this point, if they haven't already invested into the market or if they are yet to do so during this chop that's been unfolding over the past number of months, that their time is limited. And really what we're seeing today is that original gap, all right, or that immediate gap above these all-time highs. Generally, this is what we call a continuation gap. Generally, it's what we call a measured move. And generally, it represents, all right, a doubling of the current paragraph, that we find ourselves in. So if you wanted to take this candlestick here and project it through to the opening of the gap up here, so let's just call it 3,025 points, and you can say that this is shy of 2,900. So we'll call it about 150 points. You can call this 150 point move, or at least a measured move from the beginning of this breakout here. So if you wanted to round this down to say 3,030 points, and then project 150 on top, all right, you're really starting to see the upside potential of this market. I mean, you're looking at a S&P 500, right, very easily just shy of 3,200 points. You're probably looking at 3,180 if my maths is correct as I speak through it, right, live here on this video right now. So again, the upside of the S&P 500 at this point, once we get settled and once we hold above these resistance areas, I believe we're going to see the S&P 500 up and around 4,000. At some point in the year 2020, the NASDAQ will be sitting just shy or very close to 10,000 points. And we'll just see how the Dow Jones Industrial Average is lingering at that later date. But for now, anyway, for those people who've been accumulating SPY positions and have been using options, or if you've been trading Q positions and have been forward pushing those option expirations far into the distance, you're just sitting back right now, right? Continuing to clip these coupons, not coupons necessarily, but sort of the net movement on a daily or even weekly basis. And that's going to continue for a number of months into the future. This party right here, it's only just getting started, right? It's sort of that 5 p.m. and there's a few people showing up to the party, right? And at some point, it's just going to turn absolutely parabolic. It looks as though it's already somewhat parabolic. It's just been a very strong sort of month in the period of October, making back the original sort of losses that the market endured through the midsection of September into the very early period of October. We've made all of those losses back, and now we're starting to overshoot them and begin to, of course, claw back and make fresh new all-time highs. So it's a very important juncture, right, on the location of the charts. It's an important juncture to understand when it comes to, I guess, mass psychology of human beings themselves. And what's really going to drive this market is not the fundamental underpinning of it, which again continues to weaken. There's no contention there whatsoever. Yes, the fundamentals are deteriorating. However, they are deteriorating relatively slowly. What is more important right now is how people are feeling. All right, that's what's going to drive the market. That is why we call this essentially right now the beginning of PP, and that's public participation, whereby the large sums of money are going to re-enter the market now that it appears they have stabilized and we're sort of moving into open skies once again, or clear blue skies above us. So everything is looking good. Again, the elephant remains at this point, the two open windows that may or may not close. If this is a continuation gap, well, then this doesn't need to close. But really, as I sit down and look at these markets, I would feel much more comfortable, and I know this is probably going to frustrate a lot of people, but it, technically speaking, is what's needed, so to speak. What would really lay the foundation, contrary to sort of public opinion right now, is that if the markets did retrace, a lot of people may be short-term frustrated in that movement, but for the longer-term duration of this macro primary bullish uptrend, it would do absolute wonders for that to really persist really through the entirety of 2020. We're going to follow along with those leading economic indicators mixed with a bunch of other fundamental data that we do routinely during the month. But as it stands right now, there's nothing holding this market back. And once we see the industrial average really break above that September high, all right, this party is really going to heat up. And I don't want you to miss out on the action, all right, because it's very easy just to place a longer term duration sort of option contract or number of contracts and just sit back and allow the market to work for you. All right. And that's really the name of the game. And that's really the difference of the accumulation into that public participation. Today's candlestick, although we did see the bullish pop, it did leave us with that of a pseudo sort of shooting star candle on the Dow Jones Industrial Average. So again, by all means, we're still not above these resistance areas, and resistance on the Dow Jones, it is still holding. Okay, just to point that out to you. But overall, I hope that you can see that the markets themselves, they want to move higher, and you shouldn't fight the trend. Okay, embrace the trend even if you disagree with it. Don't argue with it, all right? Because The markets themselves, they can, again, cliche, but they can remain irrational a lot longer than you can remain liquid. And you don't want to hold, obviously, bearish positions in the face of a rising market. This is going to turn stupid at some point, absolutely stupid. But we'll have the common sense to hopefully, anyway, roll out of those positions at a much later date, all right, and be selling those contracts back to people who are then only just simply jumping into the market at the complete wrong time. Now's the time to be long, even if we endure that of a short-term pullback, but there's no reason, right, that we may actually see that play out. Just wanted to really differentiate that and make that very clear at this particular time. Above 8,260 again, most recent continuational entry on the NASDAQ. This is after the 7,914 entry, the 7,996 entry. And above all, we're breaking above what seems to be that of the symmetrical triangle. We spoke about this over the weekend. Generally, what happens is you do see the back test of the pattern itself as a retest of resistance as new support. We'll see whether or not that plays out. But by all means, right now, these markets are really starting to gallop to the upside. Now, there's a couple of companies still yet to report in this upcoming week, especially for us anyway, in that pro analysis class. We've got Google, COP, and Apple, which are going to be done by the close of business on Wednesday, or at least into the open on Thursday. So they're going to be re-added into our list come this weekend. If there are trading opportunities after the gap, I will update you on this. But again, if you wanted to pay attention to Apple, we started going long Apple at 202.98. And here we are. Not that we've captured the entirety of this move, because we haven't. We actually closed out the position more so around 235. But even from there, it's been a tremendous move. However, again, earnings are upcoming. Today on Amazon, we've got another printout, $15.75. Still hasn't broken above that next entry. However, target on this trade, just to alert you, 1975. Let me repeat myself. The target on this trade, 1975. Do not be surprised when you see Amazon up there when it chooses to sort of to make its progress towards that gap close. We've got Boeing Airlines. This is something we need to allow a little bit more additional time. It needs to set the perimeters. It needs to build the foundation before you can really get carried away with a decent technical trade. Baidu continues to move sideways. Caterpillar had a big gap today, or not a gap, but a long day. White Morobozu candlestick, which is exciting. It's definitively broken above this downward sloping resistance area. If I go to the weekly chart, it will best sort of show this for you, but you can see that we're very much so broken above that most recently, which is great. We've been speaking about this for a long time. And this is going back to, again, the exhaustion of the move where we started buying calls at 119 and 120.39. Okay, 124, and then again more recently at 121. These are all bullish trades off support after the false break to the downside. Caterpillar is ripping. Absolutely ripping. COP, not really doing a whole lot. As I said, it's got earnings this week. Disney, moving sideways. Earnings second week, I believe, of November. Google set to report today. However, it has broken out above 1266. There is no trade in Google at the moment, even though it did have a pretty decent bullish day. You've got IBM beginning to set up that of a rounding bottom. Very strong chart pattern there from that support area. Microsoft, look at this, up $3.46 today. A high wave spinning top. But again, much like the markets, we've established another gap. The good news is that Microsoft itself is printing at fresh new all-time highs, and it's helping lead the NASDAQ higher. You're seeing a lot of contribution from these past historical market leaders when it comes to individual stocks. Now that's starting to be the case. Here we are in the month of October. So again, as much as people are talking about the weakness in market breadth, it's actually strengthening if you pay attention to the transportational average and the Russell 2000. Yes, it has been sleepy for an extended period of 2019. However, again, it comes back into that simple understanding of accumulation, right, through that of sideways range-bound markets, right, through the period of consolidation prior to that of the public participation, which is where the funds will drive these markets higher. The final stock today is Netflix. Netflix has popped above 281.34. We closed at 281.86. I really like this trade. Similar to other trades whereby we've had false sort of breaks to the downside and overall a complete positive divergence and an exhaustion in the bearish move. Don't be surprised to see Netflix trading up at 361.26 over the coming months. All right, just as a big sort of heads up warning for people who are watching this analysis video right now. All right, so again, if you have any questions, please email me. Jump into that pro analysis class to learn more. Otherwise, enjoy your Monday evening, everybody. And I'll be back with you later in the week for another market address. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.